Glad to know you're still with us. We take a look at the money market as the overnight lending rate contracted by 333 basis points to 7% in the absence of any significant inflow into the system. The Treasury bill secondary market traded with the mixed sentiment, but with a bearish tilt as the average yield inched higher by 1 basis point to 3.9%. Now, across the curve, the average yield was flat at the mid and long segment, but expanded at the short plus 5 basis points end due to profit taking on the 71 DTM bill. As well, the average yield was unchanged at 4.4% in the open market operation segment. Trading activities in the Treasury bond secondary market turned bullish as the average yield dipped by 4 basis points to 11.1%. Across the benchmark curve, the average yield contracted at the short and mid segments as investors demanded for various instruments. Now we have with us John Kana, your head research and strategist, Imperial Assets Managers. He's joining us via the telephone to help make sense of what happened at the money market. Hello, John Kana. You're good to have you on board.
Yes, I'm fine. Thank you for having me.
All right, give us a sense of activities in the market.
Okay, thank you so much. System liquidity closed yesterday at 463.39 billion. This was an increase compared to Tuesday close of 249.75 billion. There was an OMO inflows on Tuesday. If you add that to what we had as a Tuesday, that pushed system liquidity to 463.39 billion. As such, at the money market, rates compressed by 333 basis points on core rate or overnight rate to 7%. Open repo rate equally compressed by 333 basis points to 6.33%. When you move into OMO market, like you pointed, OMO market remain stable or remain unchanged. Average yield settled at 4.3%. At the NTB market, we saw bearish ticks. There was sell-off on 11 August 2022 maturity. Yield went up by 28 basis points here. Overall, average yield settled at average yield went up by 3 basis points to settle at 3.9%. At the bond market, we saw bullish activities at the short end of the yield curve. Average yield compressed by 12 basis points because of demand on January 2026 maturity, where we saw average yield down by 65 basis points. At the mid end of the yield curve, we saw compression in yield for this setup by 7 basis points because of demand on April 2029 maturity, which was down by 7 basis points. At the short end of the curve, there was sell-off as on January 2042. This was the only activity that we recorded in this long end of the curve. Average yield was up by 8 basis points. Overall, in the bond market, average yield was up by 4 basis points as it settled at 11.62%. What we have seen in the bond market, if you look at the short and the mid end of the curve, we have been seeing demands, meaning why yields are coming down, prices are going up. But at the long end of the curve, we saw sell-off. As market participants prepared ahead of bond option that is expected to come up on the 20th of June 2022. What this tells is that many market participants are adjusting themselves ahead of time to what they expect DMO to do in respect to the action that MPC had taken on MPR.
All right, let's take a look at the Naira, which appreciated by 0.1% to 419 Naira to the dollar at investors and exporters window. Well, this is a bit of good news. Any updates in the currency market this morning?
Yeah. Like you have asked, this is a good news. If you look at I and E window was appreciated by 0.12% to such as 4.19%. How long will this good news last? I won't be able to answer this, because if you look at in the last 2 weeks, we've been having a pressure on our currency markets. What I can say in respect to what happened yesterday, it was because foreign reserve closed flat. Foreign reserve has been dropping significantly in the recent past days, but yesterday it closed flat to retaining a position at 38.49 billion US dollar. I guess that's really supported the I and E window that we saw marginal appreciation of 0.12%.
All right, let's look at the bonds market. I know you already talked about that, but then the average yield was flat at the long end of the curve. What informed this?
Are you talking about bond market or
exactly.
NCB?
The bonds market.
For the bond market, like I said, at the short end of the curve, average yield compressed by 12 basis points. I said there was demand on January 2026, and there was equally demand on 2023 and 2024, but that was marginal. But the major driver of the short end of the yield curve was January 2026 maturity.
Okay, well, we're actually looking at the fact that the average yield was flat at the long end of the curve.
Oh yeah, at the long end of the curve. I have said, I pointed out something. I said market participants are ahead of time, preparing ahead of time on the bond also expected to hold on the 20th of June. What they are doing, because if you look at what happened at the NCB auction that was done a week ago, we saw CBN increasing the spot rates across the three major maturities, the short, medium, and the long end. So markets are anticipating that DMO is going to hike rates across the three major maturities that we push to market on the 20th of March. And so what we have been seeing is we've been seeing some people selling long position to go to short in readiness to what they expect to happen at in the short end of the market.
Okay, now let's take a look at this week in totality. What sentiment is likely to dominate the markets this week?
Today is Thursday. We have Thursday tomorrow, Thursday and Friday. With improvement in system liquidity, the bond market, the OMO and the NCB market, other than what happened yesterday, have been relatively flat. We expect these two end of the fixed income market to remain flat, obviously because of the yield position, the yield that they currently carries. If you at the bond market, we expect improvement in demand again, as we saw yesterday. We're looking at the short and the mid end of the yield curve. There should be demand coming in. At the long end of the yield curve, we expect a little bit of sell-off on a 2042 maturity.
All right, thank you so much, John Kanayo. This is a good place to anchor. Thank you for your thoughts on the show.
Thank you, and thank you for having me.
All right, we've been speaking with John Kanayo, Head Research and Strategies, Imperial Assets Manager. Thank you so much. And coming up after this break, it's the latest industry data released by the Nigerian Communications Commission, which has revealed that telecom operators recorded a total of 2.5 million new subscriptions in April 2022. We'll bring you details in our news updates when we return from this break.